In terms of what do you make of the Fed and what they did yesterday and where long-term rates will go?
Yeah, I mean, I think the big takeaway from yesterday is the Fed succeeded in out-hawking the risky asset markets, which were expecting more dovishness, while they failed to out-hawk the bond market. And so the bond market did the work for them and moved fairly meaningfully after the what was a hawkish outcome. The meeting was a big shift because after 13 months of decidedly dovish posture, the Fed acknowledged that it may have been premature to act as if the mission was accomplished. It took 13 months to reach this decision. It's not going to be reversed, I don't think. I don't think there's going to be a repivot until the inflation is dead or the economy tanks.
So this was a significant pivot. Do you see any room in 2025 for an even more hawkish pivot? And I'm asking you this because Bloomberg was citing a trade in the options market linked to SOFR, which basically bet on a very hawkish pivot in 2025, which would indicate perhaps a rate hiking path.
Yeah, I can't get there. I think with interest rates rising as they have and likely to continue to rise, I could see the 10-year drifting out to 4 3/4 or 5%. I don't think they're going to rise significantly more than that. But with that and potentially a slightly weaker equity market, you could actually start to see the economy, if these rates stay higher for something more than a few weeks, if they stay higher for a few months, I think you're going to start seeing the economy soften a little bit, and that should allow the Fed to basically stay on path.
Andy, it's Karen. Thanks for being on today. I know you often talk about how they refund, not just how much it is, but how they actually do it. Do you think that's going to change a lot? And if so, how?
Yeah, I mean, I think the fiscal outlook is uncertain, and the sequencing of the agenda for the Trump administration is not certain. But what we do know is coming is on February 3rd, the TBAC will meet, the first time that Treasury Secretary Bessent will have the mantle, and one of his underlings will run that meeting, and they'll have to decide whether they're going to change the policy that the prior administration had, which resulted in, over the course since quantitative tightening started, resulted in 50% of the nation's debt being financed with bills. Secretary Bessent has been very public about saying he thinks that is manipulating the economy via the Treasury Secretary role, which is not their role, and that they should extend the debt financing. That could have an impact on the long end as well, but it's unclear whether that'll happen at this meeting upcoming or the next one.
Given all these uncertainties, Andy, short term, are you constructive on equities? Do you think the environment is good?
Yeah, ahead of the Fed meeting and earlier this month, I started selling equity short, and I've also been short bonds since the Fed cut the 50 basis points in September. I covered a lot of my equity short today, and I covered all of my bond short. I think the rest of the month could be choppy, but I think if the economy, that the destination is higher for the 10-year bond, because the 2-year bond is going to stay around Fed funds until a cutting cycle starts again. So the drift up in the 10-year should be bearish bonds in the new year, and that should keep equity multiples in check, which to me means that, the easier path is downward in the first quarter.
All right. Andy, thank you. Great to speak with you. Happy holidays.
You too.
Andy Constan.